2,000 checks to some Americans, it comes as Americans remain very concerned about affordability. An issue credited with boosting Democrats' recent election victories, the president floated the idea of sending $2,000 to individuals who are not part of a high-income bracket. It's not the first time, and the president has floated this idea, but it's not up to the president to write those checks.
Breaking alert, everyone. This is David from Stimulus Wealth, and if you're watching this right now, you're about to get the full breakdown on the $2,000 stimulus update that's buzzing across the nation. Reports are flooding in about potential payments tied to tariffs and tax reforms, with figures up to $2,000 per household being discussed at the highest levels. But hold on, before you hit pause, know this. Millions could be impacted, and we're diving into every detail without the fluff. If you've been searching for clarity on when, who, and how, stay locked in because this could change your financial planning for 2026. Let's jump right in. First off, what exactly is this $2,000 update? It's not a single program, but stems from two key proposals gaining traction in December 2025. The primary one is President Trump's tariff dividend idea, where revenue from new tariffs, estimated in the trillions, could fund direct payments to Americans. Trump first floated this in a July 2025 speech, suggesting rebates to offset costs, and reiterated it in a November Truth Social post and a December 2nd cabinet meeting, emphasizing returns to low and middle income families, excluding high earners. He described it as a way to prove tariffs benefits, with payments potentially excluding high earners. As of December 27, 2025, this remains a proposal requiring congressional approval, with no new confirmations of implementation dates beyond general 2026 discussions. Parallel to that, Treasury Secretary Scott Bessent announced on December 11th that working Americans could see large tax refunds, $1,000 to $2,000 per household, totaling $100 billion to $150 billion, stemming from tax cuts in the One Big Beautiful Bill Act. This includes provisions like auto deductibility and no taxes on tips, leading to over-withholding in 2025 paychecks that would be refunded in early 2026. White House National Economic Council Director Kevin Hassett echoed this, projecting an extra $1,600 to $2,000 for many next year based on economic models from administration briefings. Key point, these are proposals and announcements from administration officials drawn from multiple sources like cabinet meetings, press briefings, and economic analyses. No payments are hitting accounts in December 2025. That's misinformation circulating online, as confirmed by fact checks from outlets like Fox 5 DC. Instead, focus shifts to 2026 implementations, with tariff revenues already accumulating at over $200 billion in 2025 fiscal year estimates from Treasury data. To clarify, the tariff dividend isn't yet law. It requires congressional action, similar to past stimulus rounds where bills like the CARES Act took weeks to pass. A related bill, the American Worker Rebate Act of 2025, introduced by Senator Josh Hawley in July, aims to distribute at least $600 per adult and dependent child, scaling up to $2,400 for a family of 4 using tariff proceeds, with specifics on distribution methods like direct deposit or checks outlined in the bill text. It was referred to the Senate Finance Committee, but hasn't advanced further as of December 27, 2025, per congressional tracking sites. Budget experts from the Tax Foundation have raised doubts, noting tariff revenues may not cover the costs without adding to the deficit, estimating a potential $300 billion injection, but with risks of increased national debt by $200 billion. On the tax refund side, Bessent's comments tie directly to the One Big Beautiful Bill Act's tax relief, effective for 2025, which could mean refunds for those whose withholdings exceed new lower liabilities, including expanded deductions for overtime pay and senior citizens. This isn't a new stimulus, but a rebate from overpaid taxes, differing from direct payments by relying on annual tax filings. Quick poll for you viewers. Do you think these $2,000 payments will materialize in 2026? A for yes, B for no. Drop your answer in the comments below. And I'll shout out top responses in my next video. This keeps the conversation going. Who qualifies? Now, let's break down eligibility, crucial for planning. For the proposed tariff dividend, Trump has specified it targets low and middle income Americans, potentially those earning under $100,000 annually, excluding the wealthy, as stated in his December 2nd cabinet remarks. Drawing from Hawley's bill, it would use income thresholds similar to past stimulus. full $600 per person for singles under $75,000 AGI, phasing out up to $99,000. For families, higher limits up to $150,000 for joint filers, excluding dependents and phase-outs. Dependents, including children under 18 and full-time students up to 24, would qualify, potentially boosting family amounts to $2,400 for four, with adjustments for partial dependents. Statistics show about 60% of U.S. households earn under $100,000 per 2024 census data, meaning roughly 80 million individuals could be eligible if passed, covering approximately 165 million people when including dependents. But remember, this is based on 2024 tax frameworks. Adjust for inflation indices released by IRS in October 2025, which raised thresholds by 2.8%. For tax refunds, Besant targets working Americans who haven't updated W-4 forms for the new deductions, including those in tipped industries like hospitality, where taxes on tips are eliminated. If you're employed and qualify for cuts like the $6,000 extra deduction for seniors over 65, effective 2025-2028, or overtime exemptions, you might see refunds averaging $1,200 based on preliminary Treasury models. Hassett estimates 150 million could benefit indirectly through higher take-home pay, with direct refunds for 90 million filers who over-withheld. Key exclusions: non-citizens without Social Security numbers, high earners above phase-out limits, and those not filing taxes for 2025. Cross-reference with IRS guidelines for past rebates, such as the 2021 Recovery Rebate Credit, which use similar criteria. Are you in the under 100K bracket? Comment yes or no. Let's see how many in our community could qualify. Timelines are everything. Here's the latest. For tariff dividends, Trump stated in his December 2nd meeting that payments could roll out in 2026 before midterms, funded by ongoing tariff collections projected at $1 trillion over 4 years. No exact dates, but if Hawley's bill passes early 2026, distributions might start mid-year, similar to 2021's March-December rollout, where 163 million payments were issued in phases. White House sources indicate congressional action needed by Q1 2026, with potential for executive orders to accelerate if legislation stalls. For tax refunds, Besant confirmed first quarter 2026, likely February to April during tax season, with e-filing opening January 27, 2026 per IRS schedules. If you file early via e-file, expect faster direct deposits. Paper checks add 4 to 6 weeks, with 85% of refunds issued electronically last year. IRS data. Average 2025 refund processing is 21 days for electronic filers, but delays possible if amendments are needed for new deductions. No December 2025 payments. Fact checks confirm that's false, with no Treasury disbursements scheduled before January. Monitor IRS announcements for shifts, as holiday closures from December 25-27, 2025 may delay updates. To properly position yourself for any upcoming rebates, credits, or dividend-style relief, the most important first step is to verify your tax status and filings early. Make sure your 2025 tax return is filed accurately and on time, reflecting all sources of income, deductions, and credits. Using reputable tax software such as TurboTax or IRS Free File can help ensure new rules are correctly applied, including changes to standard deductions, withholding thresholds, or industry-specific adjustments like no-tip or reduced tax income categories if applicable. You should also log into your account at IRS.gov to review and update your withholding preferences, confirm direct deposit details, and prevent unexpected balances or delays. For seniors age 65 and older, pay close attention to the new $6,000 senior deduction, which stacks onto the standard deduction and is scheduled to fully phase in by January 1st, 2025. This alone could significantly reduce taxable income. If dividend-style payments or rebates move forward, eligibility is expected to follow adjusted gross income, AGI, reported on tax filings, so accuracy across wages, benefits, pensions, and investment income is critical. Beyond filing correctly, take advantage of free IRS planning tools that can improve your outcome. The IRS Withholding Estimator, used by more than 5 million taxpayers in 2024, can help fine-tune your W-4 to increase refunds or reduce underpayment risk. Historically, about 70% of filers receive refunds, with the average refund reaching $2,850 in 2024, and that number could rise if new tax cuts or credits take effect. Families should also review dependent related credits carefully. Under proposals like Senator Hawley's, qualifying dependents could generate up to $500 per child in additional benefits. Don't forget to check state-level tax conformity. Currently, at least 12 states automatically align with federal tax changes, which may amplify your total refund or relief. Have you updated your W-4 or checked your IRS account this year? Share your experience in the comments. Your insight could help others avoid costly mistakes. Tracking your status is essential, and the safest place to start is always through official government portals. Log into your My Social Security account at SSA.gov or your IRS online account at IRS.gov to view real-time updates related to benefits, notices, or tax activity. If potential dividend or relief proposals are being discussed, you can independently follow legislative progress on Congress.gov, for example, by monitoring bills like S-2475, where you can see committee actions, recorded votes, amendments, and floor debate activity as it happens. For tax-related payments, the IRS Where's My Refund a tool remains the most reliable tracker and updates daily once a return is accepted. Historically, about 90% of refunds are issued within 21 days, even during peak filing periods when the IRS processes up to 50 million returns per week. Many tax prep apps, including TurboTax, also provide optional alerts, while free IRS email subscriptions offer real-time policy and procedural updates. If any dividend-style payments were approved, official confirmation would appear first through Treasury Department press releases, never third-party websites. At the same time, heightened payment discussions also lead to increased fraud activity. According to FTC data, more than 1 million scam reports in 2025 have already been linked to fake stimulus or relief claims. It's critical to remember that the IRS does not initiate contact by phone, email, or text requesting personal or financial information. Any message demanding action to activate, register, or unlock a $2,000 payment is fraudulent. These scams often involve fake government-looking websites, unofficial apps, prepaid card demands, or wire transfer requests. If you receive anything suspicious, report it immediately at FTC.gov or IRS.gov phishing and verify information only through official channels, including calling the IRS directly at 1-800-829-1040 if needed. The financial impact of these scams is significant and growing. FTC reports show Americans lost over $500 million to payment-related scams in 2025, a 20% increase compared to previous years. To protect yourself, enable two-factor authentication on all banking and benefit accounts, review bank and credit card statements weekly, and avoid clicking links from unsolicited messages. If you're concerned about identity exposure, consider enrolling in a reputable credit monitoring service to receive alerts for unusual activity. Staying informed through verified sources and slowing down before taking action remains the strongest defense against fraud while you track legitimate updates. Drawing from a wide range of reporting and analysis, the current picture around potential stimulus-style payments remains mixed and highly conditional. The Epoch Times highlighted a December update in which Trump again floated the idea of checks tied to economic pressure and trade policy, while the New York Post focused on Treasury-related discussions and Bessent's refund-style projections. At the same time, Fox 5 DC moved to fact-check circulating claims, clearly stating there are no confirmed payments scheduled for 2025. Deeper policy analysis from the Tax Foundation examined whether rebates are even feasible under current fiscal conditions, weighing cost-benefit ratios and administrative complexity. Sentiment tracking on social and prediction platforms suggests market odds ranging roughly from 38% to 50% for some form of payments in 2026, but these remain speculative. Broader coverage from USA Today and The Hill as of December 27th underscores that significant congressional hurdles remain, particularly around funding mechanisms and bipartisan support. From a fiscal standpoint, the numbers involved are massive and politically sensitive. Estimates cited by groups like the Committee for a Responsible Federal Budget suggest that a nationwide rebate program could inject around $300 billion into the economy in the short term, while simultaneously adding approximately $200 billion to the federal debt, With the national debt already hovering near $34 trillion, lawmakers are balancing short-term relief against long-term sustainability. GDP growth from such a stimulus is projected at 0.5% to 1%, which is meaningful but lower than the 1% to 2% boost seen after earlier pandemic-era stimulus programs. Analysts note that much of the economic lift would likely come from increased consumer spending, particularly in lower-income households. Looking at household-level impact, estimates suggest that up to 150 million working adults could feel some effect if rebates were approved, with the greatest benefit concentrated among individuals earning under $50,000 in adjusted gross income, who historically spend a higher share of any additional cash. Census-based breakdowns indicate consumer spending in these groups could rise 3% to 5%, providing targeted relief. However, inflation remains a central risk. Multiple experts warn that tariffs and supply-side pressures could raise consumer costs by 5% to 10%, potentially offsetting the benefit of any rebate. This could push the consumer price index up 2% to 3% in 2026, diluting real purchasing power. Over the longer term, sustained or well-targeted rebates could still reduce poverty rates by 1 to 2 percentage points, but only if paired with careful fiscal controls and broader economic stability. Is this like COVID checks? No, those were emergency under CARES Act with $1,200 base. This is policy-driven with tariff funding. Taxable? Likely not, per past precedents where rebates were excluded from income. Impact on SSI. Dividends may not affect benefits if structured as non-income, but consult SSA. Drop your questions below. I'll cover top ones next. That's the comprehensive $2,000 update. Stay informed, act wisely. If this helped, smash that like button, subscribe to Stimulus Wealth for daily alerts, and comment your thoughts below. Turn on notifications. We're your go-to for financial news. This is David signing off. See you soon.